Welcome to the Daily Insights that Matter. In August, the Indian stock market witnessed an intriguing phenomenon as retail investors flocked to the derivative markets in record numbers, seemingly impervious to the warnings issued by the market regulators. So what are futures and options? Futures and options are major types of derivatives trading in the stock market which derive the value from the underlying asset, which could be a company stock, a broader stock market index, or commodities, ETFs, etc. These are contracts signed by two parties for trading a stock asset at a predetermined price on a later date and make a gain or loss on the expiry of the contract. Previously, SEBI had asked brokers to run mandatory disclosures and warnings on the platform regarding the risks associated with trading in derivative products in a bid to educate and protect investors. Despite these efforts, the number of retail participants trading in derivatives on NSE hit a record high in August. The number of traders increased to 4 million, up from 3.7 million in July, and well above the average 2.8 million per month during the year 2022 to 2023. According to a research done by SEBI, it was found that 9 out of 10 traders lose money while trading in derivative options. And since then, SEBI has mandated brokers to run disclosures and warnings on the platforms to educate investors. Despite this, traders rushed to derivative products as the surge in participation was fueled by the growing popularity of relatively zero-day options which expire daily. The low cost of these zero-day options against monthly or weekly expiry of options are inducing investors in the hopes of raking unlimited gains. Moreover, markets hitting all-time highs is adding to the positive investor sentiment. Having said that, it is important to have a proper risk management strategy and understand the volatility of derivative products before trading them. In the first half of fiscal year 24, the centre recorded a substantial 20% increase in its direct tax receipts from companies, LLPs and individuals amounting to Rs 3.5 lakh crore rupees till 11:30 pm on 15 September 2023. Specifically, corporate tax collections recorded Rs 2.8 lakh crore, while personal income tax contributions amounted to Rs 74,481 crore during the initial 2 quarters of the current fiscal year. In contrast, during the first half of fiscal year 23, the advanced tax collections were at 2.95 lakh crore rupees. This notable surge in tax revenue was primarily driven by a significant rise in income tax receipts and a recovery in corporate tax collections. Increased profitability among corporations in the second quarter coupled with reduced input costs contributed to a strong performance in the quarterly advanced tax collections. Furthermore, as of September 15th, the gross tax collections for fiscal year 23 reached Rs 9.85 lakh crore. It's worth noting that the centre has issued refunds totaling 1.22 lakh crore so far this year. Consequently, the net tax collections for fiscal year 23 amounted to 8.63 lakh crore, reflecting a substantial year-on-year increase of 23%. Healthy advanced tax numbers suggest the economic growth momentum has continued in the second quarter as suggested by various high-frequency indicators. Cumulative tax revenues are projected to reflect a healthier trend at the end of the current month, which helped negate the increasing fiscal deficit relative to the year-ago period. The government had originally projected a direct tax collections of Rs 18.2 lakh crore for the fiscal year 2024, with an estimated growth rate of 9.6%. Although this growth rate is slower than the previous fiscal year's direct tax collections, it will assist the government in maintaining control over the fiscal deficit. This is particularly crucial at a time when the government is compelled to front-load capital expenditure to stimulate economic growth amid global economic uncertainties. For fiscal year 2023, the initial budget estimate for direct tax revenue was Rs 14.2 lakh crore, which was later revised to 16.5 lakh crore. However, the actual figure ultimately exceeded expectations, reaching Rs 16.61 lakh crore. With this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com